I can't believe. I'm your host, Steve Van Metre, and thanks for joining me today. In our show today, Bank of America says the unthinkable just happened and that investors are making the biggest mistake of their lifetimes right now. I'm going to show you what Bank of America says investors are doing, and more importantly, how you can avoid the same mistake they are. And that's why we're kicking off our inaugural chart show for the year. And we like to look at the technicals, momentum, and machine positions of the market each week to help you be a better investor. And we have a sponsor for today's show. One of our biggest success stories that we featured is Imix Biopharma. You can find them on the NASDAQ under the symbol IMMX. Now, when we talk about success stories, when we take on a sponsor, my team goes out, reviews the company, meets with the management team, looks at the news flow and the products to find opportunities to invest in their stock either over the short term or long term. And Imix has been one of those biggest success stories. As you can see, I'm going to show you a short-term setup. They think caused their stock to go up as much as 24%. Stay tuned for more information or check out the pinned comment or description below. And now let's head over to Bloomberg, where we find out the biggest mistake investors are making, which is completely unthinkable in the markets today. As investors are rushing into cash at a record pace in the first week as they poured $123 billion into money markets, and this is a point where we're seeing the NASDAQ just made recently new all-time highs, and we're seeing the S&P 500 chase up and make right near new all-time highs. So we look at the equity market and say this could be the beginning of a big move higher in stocks, and then we look at the bond market and we see that the Fed is likely to make cuts this year, suggesting that there could be huge returns in the bond market as well, and yet investors continue to run to cash, which BofA says is a huge mistake. And this happened. $123 billion moved to cash through the week of January 3rd. Now, they say this is kind of typical to see cash moving into the money markets at the beginning of the year, but this was the largest ever for the first week. Meanwhile, stocks saw a second week of inflows of $7.6 billion, and bond funds received $10.6 billion on this recent pullback. And the current inflow episode into money markets is likely to end all the way not until September, if the historical trend for Federal Reserve interest rate cycles hold true. This is according to BFA's Hartnett. As he says, when we look at what investors are doing here, they're making a mistake because they're waiting for the Fed, and so they're parking in money market. What they don't understand is the bond market often leads that. Of course, we give you all the setups for that. Let's take a look at further as cash has maintained its appeal even after money market funds received a record $1.2 trillion last year, far above the global inflows into equities, showing investors missed out on 2023's equity market rally. We're going to show you why you don't have to worry about missing out anymore, because Citi strategists are telling us buy the dips, but don't chase the rallies. Wait for a pullback, and something we think is going to have a big pullback. In fact, just did and is about to make a huge launch higher. That is the stock of our sponsor today, Imix Biopharma. Again, you can find them on the NASDAQ under the symbol IMMX. And stay tuned, we'll show you an incredible chart setup that could see a 24% return. Again, all the information in the description or pinned comment below, because according to Citi, the view is supported by expectations of about an 8% upside for the MSCI All Country World Index and 9% earnings growth for 2024, a conservative assumption, they say, in a Fed easing cycle. So what happens is usually investors come pouring into stocks ahead of a rate cut. Usually the first cut is considered still bullish. It's what happens after that that matters. But if you look at our setup, as we'll see here in a little bit, for Imix of a potential 24% short-term return, it's going to blow away what anything we think the market could do this year. Let's take a further look now as we move over into Goldman and we look at their tactical flow of funds report for January, and they're asking the question, have global asset allocators already traded the January move and switched their exposure into equities? Because this is something that people want to know. Is the equity market already crammed? Has everyone already bought? The answer, according to Goldman, is no. As global equities logged $127 billion worth of inflows in 2023, this is the least amount of inflows in the past 4 years. Despite the rally, even in a down tape in 2022, saw larger inflows. So all this money moving into money markets, well, as Goldman says, some of it's going to come out and back into the equity markets. Because households own the largest amount of equity exposure, 55% of total market cap. Their asset choice of 2023, though, has been money market funds, saying they've missed out in a big way on the rally in stocks. And we know that investors will play chase because something that you should mark on your calendar, the peak corporate buyback blackout window. Well, corporates are coming back online in January 19th and with some big firepower because according to Goldman, their estimates show $840 billion of corporate buyback scheduled potentially for this year, a 4% year-over-year increase. And this may help mute weakness, specifically in the largest tech stocks, because we know they are big buyers of equities. Of course, then the next question is where does this put the machines? Well, as we've talked about before, machines often lead big moves and then get locked into their positions. And sure enough, that's exactly what we saw. As CTA positioning in U.S. equities are approaching 2023 highs, the Goldman Model has this cohort as small buyers in a flat up tape and small sellers in a down tape, suggesting they're going to be holding their position. And relatively insignificant here, they've got some thresholds to watch. Short-term on the S&P at 46.18, mid-term 44.81, long-term 44.20. The latter two levels are more important for when the pendulum here really swings to big sales from this community, meaning that the corporate share buyback machine needs to start and start soon because it's going to put a little bit of a tailwind under the equity markets and something that we think is going to have a big tailwind. That's the stock of our sponsor today, Imix Biopharm, again on the NASDAQ under IMMX. Now look at this. This is a historical chart for Imix. Now the last two times we featured them on our show were here and here. Of course, those had big returns that have followed. And you might remember we featured them along the way as well. They've been one of our key sponsors and they broke out almost and made new all-time highs, and we suggested if they could break through this zone of resistance here, that would happen. And now it's pulling back. We can see the last time it broke out and pulled back into a zone of support and found buyers, the stock took off. And you can see over the last few trading days, even as the stock pulled back, there were buyers there, making Imix a big potential opportunity as we see for a short-term return of 24% and maybe even more, depending on what news is coming out of this company. But now let's take a look at the equity markets from the machine positioning. As we look at the equity market, we see S&P 500, no buyers here at this point. As Goldman said, this data from Metre, look for 46.38 before they even trigger a sell. So if you got some margin here, because Friday's close was at 46.97. Let's take a look at our own screens because we've got momentum here is negative on the S&P. Not a big surprise. We've seen the relative strength index or RSI pull back to 54. Then we've seen momentum slow down as the market is really eager to get those corporate share buyback machine growing again. MACD's got a negative cross, and we can look at our own machine positioning here. We note that according to Goldman and Metre, we can see they're not selling, but we're suggesting that maybe their targets over the next couple of weeks, if the market doesn't settle down, could flip to sellers. You see, here's our CTA report. This is our fast signal. This is our slow signal. And that tells you right now there's this pullback on a historical basis here. And we've got our tactical report below. This is Momentum Timer Pro. Again, you can find links to both of these in the description with a 1 month free trial for 3 lucky people. There's 3 coupon codes. We can see momentum here in the short term pullback over the 1 month window. Momentum is maxed out. Same with a 3 month and almost on a 6 month window. So we look at the equity market. We've talked about this, that momentum is extended. And when this happens, machines will get up there and they'll hold, and then they'll start to sell because their sell point, that trigger line, it goes up every day that the market doesn't keep rallying. And at some point it'll go down and trigger a sell point. Our reports give you the advanced look on that. Now remember, we've got to buy it open back on November 3rd as we're going to update on all of our trades here. It's up 8.03%. We're leaving our stop loss level right where it's at. If Citibank is right, then there's a pullback. We'll look to take advantage of that. But we want to hold on to some of our gains. Upside target unchanged, downside target 448. Let's head over and take a look at the charts here. To get a picture of the S&P 500, looking at SPY, we want to lock these gains in here around 464 if it pulls back any further. But look to this supply zone. As we zoom out on the chart here a little bit, you notice there's a massive supply zone like Imix. And what happens is when you have a rally and then it pulls back into a supply zone and you find buyers, Well, it takes off because, again, you're talking about clearing out the last of the sellers. That's what's looking to happen here. I expect to see the S&P pull back down into the supply zone. I want to lock in, again, some of those gains and look to reload here on the next big rally. So there's your setup for the S&P. On SPY, look for the pullback to around 435. They're at the 50-day moving average. Let's take a look at tech stocks. Momentum here is actually should be negative, I should say. I didn't update that. 3 consecutive daily sell signals on our Momentum Timer Pro that, again, aggregates all those technical signals like the RSI, the MACD, and all that stuff, smooths them all out for you, gives you one clear signal. We've got 3 consecutive days of selling our momentum to the downside, even though the 1 month and 3 month are maxed out in terms of their momentum. 6-month window is at a mid-size. That is pretty strong. And you can look at our own machine positioning, our CTA, suggesting that perhaps even though this machines on the S&P might not turn to sellers, we could see some selling on the NASDAQ side. Again, you can find links to both reports. We've got a buy it open back on October 9th. That is up 11.9%. We're going to keep our stop loss levels at 393. It's right below Friday's close at 396. Again, when you have a gain, you want to lock it in. Upside target, well, who knows, because this thing could just rocket up straight higher. So I'm going to put some question marks here. Downside target, I'm looking at the 100-day moving average as, again, we look for a pullback here on the tech stocks. And sure enough, you can see this beautiful supply zone. We're going to zoom out here to the 5-year window. And you can see there it is. It pulls back in the supply zone. If it finds buyers there, look for it to retake its recent highs and go even higher, particularly once those corporate share buybacks start coming back into play. Now let's talk about what's going on in China here, because we put a trade on. Remember, we talked about this before we went and turned off our Sunday show for the year. We told you the signals to watch. And what happened is, on 12/21, our machine positioning went from max short and started to cover one level. That was the first indicator. Momentum Timer Pro had flashed a sell signal that day, so we waited. 12/22, Momentum Timer Pro, 1 daily buy count puts you at a buy open on 22.88. Current pricing Clyde said 23.23. That trades up 1.8 or 53%, not 83, 1.53%, because it's got 8 consecutive daily buy signals. Let's take a look at what's going on with FXI, because this thing has a lot of legs. You see, if the dollar starts to head lower here, the FXI is going to take off. It's got a beautiful supply zone right down here. You can go back, and we got to go way back here. Let's go back over 5 years. We'll zoom in. And you can see when it gets down into this level, buyers show up. Now, as we zoom in here to the 6 month, you can see it gets down to this level of buyers and more buyers, and it took off, pulled back, and buyers. There is your signal that at some point this is going to reverse. The first move will be up into this upward supply zone. If the dollar weakens significantly, this could be one of the biggest trades this year on FXI. So look for the next move into this $25 price range, somewhere right around the 50-day moving average. From here, let's go on to the bond market, because what do we see? Over 116.82 to buy. This from Nomura, under 108.37 to sell on the 10-year. Friday's close at 111.67. And so what this means is real simple. We've seen a pullback in the bond market. Everyone's starting to say, Steve, your reports are not that good. So no, they're that great because they nailed the whole signal. We got to understand, markets don't move in a straight line. They have pullbacks. We're seeing that here. The key part to understand is the machines aren't sellers here. They're kind of holding position. So as long as we see some settlement going on in the bond market where prices start to hold up, that next move higher, we'll see the machines add positions and take off. And again, we pointed this out a while back when this was max short on TLT. Again, using our own reports to show you how easy it is to trade and make money on our last one. Remember, we didn't put a stop loss on, so we had a dollar cost average into this trade. Again, key, use stop losses, my friends, please do. And we had a bunch of trades on this, and we're still up. Now we're pretty much even at 0.11%, but notably, Friday's close at 96.29. Our cost basis, 96.18. We got some momentum is negatives as the RSI is down to 50. MACD's got a negative cross. Downside target, we're going to say, is a 50-day moving average. That's a big move lower. We'll show you where that is. Upside target, 99.30. But again, we're just seeing a bit of a pullback here. We know momentum is stretched, but off of some very low levels here. Let's take a look at the charts for TLT and see. And what happens here is it got right into this bottom of the supply zone. I'm going to zoom in. I want to show you, this is technical analysis, my friends. You notice down here what happened. You see those two dashed green lines? What is that? That is a level of support. Every time price came down there, buyers showed up. And when you break through support, it becomes resistance, because people who bought at that level now look to sell because they think perhaps they don't buy that it's going to rally here. They want to get out of the trade. And as we zoom in now to the 6-month chart, no surprise, what happened, it came up here and we have a 6-month volume profile popped out, sellers emerge, sell down here. The big move lower could be right here down into this $92, $93 or right around this $93 price range into the supply zone if the sellers dominate this. Otherwise, look for this to reverse at some point and settle up, break through that support level. If it does, now you're talking a potential that this thing is going to rally right up to right around 108, a low 108, 109 level. That is a huge return. A breakout there says, well, we're going to all-time highs on the bond market. Let's continue on here because we've got now to cover, of course, gold. Many of you big bullish on gold, and that's okay. But one of the challenges here, we have a quad top now. Makes it dangerous to trade these things as you're sitting at a level where sellers have emerged 4 times. At this point, here's how to trade this. Here's my advice. Go soft on this from a trading perspective. If you're looking to chase gold, I understand many of you own physical metal, which is great. That's fine. That is something you do and you hold on to. From a trading perspective, when you're facing a quad top, wait for it to break out and then add or take a position. At this point, this is not something you want to be buying right at the top and hoping, because what we've seen is sellers emerge here. So momentum positive on GLD, no surprise there. We've got 16 consecutive daily buy signals, no position on this one, and there's a reason why. The next upside target remains at the all-time highs. Downside target 183.50 here. Let's take a look at where 183.50 is on GLD and give you an idea. We think there's going to be a bit of a pullback here that would take all down to the supply zone here. That would actually be rather bullish, because you know it gets down to supply zone and buys. So if there are sellers here, and that's the big key, you go look over the 5 years, you've got 1, 2, 3, 4 tops. At some point, you have to understand the sellers are there. We just don't know when they're going to be worked out of that position, or maybe the buyers get exhausted. That's what we'll find. This is not something to chase, and neither do we suggest you play chase on GDX, because if this pulls back some more, we're going to show you where the entry point on this is. Momentum is negative as well. What we can see is our machine positioning has pulled back here a little bit, suggesting machines although they do not trade ETFs, we run the algorithm over them to show you how they would be positioned. So suggesting they're pulling back off their lungs. Momentum now flipping to the downside a little bit. Again, this is a no position deal because the downside target is 27. Friday's closing at 39, suggesting that if GDX has a nice pullback here, well, that's what you want to take advantage of. Because as we look over the 6-month window, we're seeing buyers here right where they were at the 6-month phase. If they don't hold here, you'll notice this thing will shoot all the way down into this lower supply zone right around the $26.75, $27 price range. And really, that's what you kind of want to wait here, is don't force this trade. Now, if this starts to break out, then you can play chase the upside. At the moment, as we look at this on Sunday here, this isn't something I would be looking to take a position on Monday morning at all. I would hold off on that one. But perhaps silver. Now, we did put a trade in on this. You remember here on 12.19, we had a buy at open at 21.91. We're down 3.2% on that, with Friday's close at 21.21. The downside target is at 20.42. But what could be the catalyst here that may make this a little more attractive than gold is gold sitting up there near that quad top. Silver's not. You get a weaker dollar. Maybe people that buy gold will be switching over and trading silver instead. It could be a bigger opportunity here. So we're going to leave this one alone. Now, you remember, because we left this off with the trade going in, we're putting the stop loss now at 20.42, matching our downside target. And we've got to see if this thing's going to flip around. I'm going to make the case of why this is a little bit better setup than I think. If you're looking for the metals, I think silver would be your choice right now. Here you can see it popped down into the supply zone. And what's critical about this is buyers are buying silver right here in between roughly $20.50 and $21. It gets down there. That's that's where they want to buy. And the evidence is strong because it popped down here. And what happened? Buyers emerged right there at the 6-month volume profile. So if that's the case, we're looking for some upside play here to around 2240 or even higher. And if that happens, we'll look to eagerly and happily lock in some gains on that, because you can see this thing has a lot more upside, perhaps even up into the $26 range if indeed this holds true and we get a nice breakout on a weaker dollar. Again, more upside potential in silver than gold, in my opinion. Another trade we put on, this is something interesting because the dollar choked, and all of a sudden we had said on Sunday, put this as a buy it open. Well, it was kind of interesting because the buy it open was at a fairly nice spot, even though we're down 1.81% on this one. Upside targets at the 21-day moving average at 2120. Friday's closing at 2058. And here's the magic number. Look at this. This thing's max short on the fast algorithms according to the machines. Minus 15% short on the longer term algorithm, suggesting we're just going to want to hold this position. You'll notice I didn't put a stop loss on here. I probably meant to as I was putting the show together, and I forgot, so we'll just leave it off. 11 consecutive daily sell signals here on Momentum Timer Pro. RSI at 33. This thing is in oversold territory, ripe for a reversal. Let's take a look at DBA. And what happened is we said on the show on the weekend, buy it open. Well, that was the next day. Everything's changed with the dollar. Price came down, and we're down a little bit here. Where is the lower level of support? Let's zoom out, and that is right down here into this $20 price range. From there, you've got a bigger move back up. A 21-day moving average, the supply zone overhead is the next target. So for now, we're going to hold on to this. Again, another play on the weaker dollar, potentially more upside potential than gold. And now, speaking of the dollar, we've got the Invesco dollar bullish UUP ETF. Momentum's positive, is coming out of oversold territory. Again, something got wonky in the dollar here, and we'll take a look at that. MACD's got a positive cross coming up off the bottom. We did get stopped out on our trade on 12.18, down 2% on our UDN short dollar trade. That was looking great until whatever happened that one day. I don't know. We've seen right now at least some short-term play in the dollar going higher. That may only be transitory as we look to the next CPI report, the next FOMC, where likely we're going to hear the Fed talk about, looking to cut rates. The market thinks that's bullish, even though it doesn't matter. You have to trade what the market expects. Let's take a look at UUP here real quick. And what we see is this thing just all of a sudden massively just gapped down. Look at that. And now it's coming back off of this. If it doesn't hold, then it rolls down and comes into this 2660, 2680 price range. Otherwise than that, maybe it rallies up to the 21-day or 200-day moving average. It's really hard to say on this one if what's going on with the dollar. But again, all eyes at this point will be on the Fed for this trade. Again, I think we're going to see, again, the market take the short side of the dollar trade on a weaker dollar. And with that, again, as I want to mention, with any sponsor of our show, you're under no obligation to purchase any stock. Be sure to do your own research before placing any trades. And with that, I'm Steve Van Metre. Thanks for watching. Thanks for being fans. And to you, having a profitable 2024. Have a great day. Bye now.